Have you ever wondered what goes on behind the closed doors of central banks? Well, Robert Kiyosaki, the famous author of Rich Dad Poor Dad, has some predictions that might make you wish those doors stayed shut. He is warning us of an unprecedented central bank crisis that's looming on the horizon. Hello everyone, welcome to our channel. In this exclusive video, we explore Kiyosaki's chilling prediction, exploring the factors that could lead to this unprecedented crisis and the steps we must take to brace ourselves for the storm that lies ahead. Before we get started, make sure to subscribe to the channel to get more informative videos on the global economy. The recent collapse of Silicon Valley Bank, SVB, and Silvergate Bank within a mere 48 hours of each other has sent shockwaves rippling through the American financial system, at a time when the economy is already on shaky ground. As the dust settles, experts in the financial industry are growing increasingly concerned that this troubling situation is only the beginning, and that darker days may lie ahead. Finance legend and the famous author, Robert Kiyosaki, has added his voice to the chorus of concern. He anticipates that a third lender will soon join the ranks of SVB and Silvergate Bank in their fall from grace. Surprisingly though, Kiyosaki sees a silver lining in this unfolding drama, predicting that the scenario will ultimately boost the value of precious metals. What's particularly noteworthy about Kiyosaki's forecast is its uncanny resemblance to his 2008 prediction, when he foresaw the downfall of investment bank Lehman Brothers. As we now know, Lehman Brothers' collapse marked a pivotal moment in the 2008 financial crisis, forever etching its name in history. With this in mind, it's hard not to wonder whether Kiyosaki's latest prediction may prove equally prophetic, heralding yet another turning point in the world of finance. In his voice, two major banks have crashed, number 3 set to go. Buy real gold and silver coins now, no ETFs. When bank number 3 goes, gold and silver rocket up. 2008, I forecasted the collapse of Lehman days before it crashed on CNN. If you want proof, go to richdad.com. As he foresees a wider economic breakdown across the globe, he cautions that bank runs could become increasingly commonplace in the wake of this crisis. And now, with growing apprehension surrounding the future of Credit Suisse, another prominent investment bank, Kiyosaki is ringing alarm bells about a potential third bank failure. The situation at Credit Suisse intensified after the bank disclosed a delay in its annual report, following a call with the Securities and Exchange Commission, SEC, concerning the lender's cash flow statements for 2019 and 2020. This revelation led to the bank's stock price plummeting to a record low on March 10, 2023. Stephan, a real estate investor, had already warned about Credit Suisse's precarious situation in October 2022, when Finbold reported that the bank's credit default swap, CDS, costs had reached their highest level since 2008. This added to the growing worries. CDS serves as a form of insurance against possible defaults, and the fact that Credit Suisse's CDS costs continued to climb in 2023 is cause for alarm. Peter Schiff, an economist who doesn't believe in cryptocurrencies, has also said that the U.S. financial system is on the verge of a crash even worse than the one in 2008. Schiff raised concerns on March 10th about the risks of mass withdrawals, which added to the sense of urgency about the current financial situation. All these factors paint a grim picture, with Kiyosaki's predictions, Credit Suisse's troubles, and Schiff's warnings converging to suggest that the global economy may be facing a crisis of unprecedented proportions. As these things happen, investors, financial institutions, and governments need to keep a close eye on the markets and get ready for possible trouble. Now more than ever, it's essential to keep a close eye on the developments in the banking sector and be proactive in taking steps to mitigate the risks associated with this looming crisis. The world's financial leaders need to work together to come up with new ideas and plans for how to handle the rough waters ahead. In times like these, it's important to remember that while the situation might seem bleak, history has shown that crises can also serve as catalysts for change and growth. By learning from the mistakes of the past and working together, we can emerge stronger and more resilient in the face of adversity. The U.S. banking system is on the verge of a much bigger collapse than 2008. Banks own long-term paper at extremely low interest rates. They can't compete with short-term treasuries. Mass withdrawals from depositors seeking higher yields will result in a wave of bank failures, he said. The recent failure of Silvergate Bank, which was known for lending to companies that dealt in cryptocurrency, sent shockwaves through the financial sector. The bank blamed its failure on recent industry and regulatory developments and other outside factors. As a result of Silvergate's failure, there has been a meltdown in the cryptocurrency market, with a lot of money leaving the industry. In this turmoil, Bitcoin, BTC, plunged to levels reminiscent of the bear market just a year ago. In a startling turn of events, Silicon Valley Bank, the 16th largest American bank, also failed, and the government subsequently took it over. The bank's failure has far-reaching effects because it had a diverse portfolio that included investments in Silicon Valley companies, especially tech startups. When Circle, the company that makes the USDC stablecoin, said that some of its reserves were held at the now-defunct Silicon Valley Bank, it sent shockwaves through the cryptocurrency market. This revelation sent the USDC's value tumbling, and at the time of writing, it was trading at $0.91, having debugged from the dollar. In this story, which is still going on, the financial world is trying to figure out what will happen because of these bank failures and how they will affect the economy as a whole, especially a cryptocurrency industry. It's a stark reminder of how interconnected our financial systems are and how important it is to stay alert when navigating a landscape that is always changing. In the wake of recent financial turmoil and the unsettling failures of banks, the Bitcoin market has also seen its share of trouble. Bitcoin is known for being very volatile, and its wild price swings have left many speculators speechless. From its all-time high of $68,990 in November 2021, Bitcoin's value plummeted to around $32,015.17 on a recent Thursday. However, Robert Kiyosaki remains unfazed by the current state of the crypto market. In a November tweet, Kiyosaki confidently stated, "Bitcoin? Worried? No. Just as I own physical gold, silver, and real estate, I also own Bitcoin." For him, the cryptographic chaos presents a golden opportunity. His optimism shines through when he says, "If Bitcoin falls to a fresh low of $10,000 to $12,000, what then? I plan on feeling instead of anxious." Kiyosaki's bullish stance on Bitcoin, much like his view on precious metals, stems from his distrust of the fiat money system and the government. He explains, "I bet on gold, silver, and Bitcoin, and I bet against the Fed, the Treasury, and Biden." In December 2022, he revealed another reason for his continued investment in cryptocurrency via Twitter. Bitcoin, like gold, silver, and gasoline, is considered a commodity. The SEC regulates securities, which include the vast majority of digital tokens. In these uncertain times for the economy, Robert Kiyosaki gives us some great advice on how to protect ourselves from the coming crisis. Diversification is key. By investing in different types of assets, like real estate, stocks, bonds, and precious metals, we can reduce risk and keep a well-balanced portfolio. Kiyosaki says we should put our faith in gold and silver, which have been thought of as safe havens for a long time during economic downturns and periods of inflation. He is getting into the world of cryptocurrencies. He thinks Bitcoin and other digital currencies could be good alternatives to traditional fiat systems, especially when the economy is unstable. He says that improving our financial literacy is important if we want to make smart decisions when the economy is in trouble. He also suggests that in addition to our main income, we develop other sources of income, such as rental income, dividends, or side businesses, to make sure we have enough money. We can strengthen our finances against uncertainty if we work hard to pay off high-interest debt and avoid borrowing money we don't need. What do you think? Are we taking Kiyosaki's advice and making the changes we need to make to protect our finances? Let us know in the comment box below. Thanks for watching, and don't forget to hit that like button and subscribe to our channel for more insightful discussions and advice on navigating these uncertain times.